Is the AI bubble finally popping? If you listen to the news or famous investors like Michael Burry, you might think it's time to sell everything and run for the hills. But while the market is panicking, I'm seeing something else entirely. I'm seeing a massive discount on 5 specific companies. One has dropped 13% for a reason that actually makes no sense. And another is a tech giant that's about to own half of pop culture. This week was crazy. We had confusing announcements from Amazon, huge earnings beats, and famous short sellers betting against our favorite stocks. But as Warren Buffett says, be greedy when others are fearful. I found 5 opportunities. Some are for long-term growth, and one is a risky swing trade play. Let's start with the one everyone is misunderstanding. First up is Astera Labs. This stock took a massive hit, dropping over 13% recently. Why? Because Amazon, AWS, announced they're using Nvidia's technology in their new setups. The market panicked, thinking Amazon was dumping Astera Labs. Host: here's why the market is wrong. Imagine a superhighway. Nvidia builds the fast sports cars, the GPUs. Astera Labs builds the pavement and the traffic lights that let those cars drive at full speed. Amazon isn't dumping Astera. They are actually partnering with Nvidia to make everything faster. This partnership actually helps the ecosystem Astera plays in. Astera's earnings were incredible. 103% revenue growth. They beat every expectation. Yet the stock fell. This is what we call a sell the news event. My strategy? I'm looking to buy anything under $150. The target? I believe this stock could hit $225 to $250 in 2026. The bottom line: it's a volatile stock, but the growth is real. Next, we have the king of AI, Nvidia. But right now, it's under pressure. Why? Because Michael Burry, the guy from The Big Short, is betting against it. He claims AI chips will be obsolete in 2 years, and that the company is a bubble. Look, Burry is smart, but I think he's wrong here. Lifespan: data center chips last 4 to 6 years, not 2. Demand: their new Blackwell chips are sold out instantly. History: people have called Nvidia a bubble every year since 2019. If you listen to them, you missed out on life-changing money. We are still in the middle of the AI cycle. It is not over. My strategy: I've owned this since it was $4, split adjusted, and I'm still holding. The target: I see Nvidia hitting $250 to $300 in 2026. Ask yourself, do you trust the AI revolution or do you trust the bears? Number 3 is Netflix. But not just because of Squid Game. There is a rumor that Netflix might buy Warner Bros. Discovery. Why would they do that? Host: one word: franchises. Imagine Netflix owning Harry Potter, Batman, Game of Thrones, and Lord of the Rings. If they combine HBO Max with Netflix, they become untouchable. They would own over 20% of all streaming time. Host: even if the deal doesn't happen, Netflix is a cash machine with huge profitability. My strategy: the stock is expensive right now. At $123, I have a buy order set lower, the buy zone. I'm waiting for a dip to $99 or $100. That's where the math makes sense to me. Okay, this next one is different. This is GitLab. I want to be clear. This is not a marry and hold forever stock for me. This is a date stock. We call this a fringe play. The stock dropped 15% because small businesses are spending less on software right now. It's in the penalty box with Wall Street. But look at the chart. It acts like a yo-yo. It goes down to $35, bounces to $60, down to $35, up to $60. It's risky, but the reward potential is high. Risk-reward: if I buy at $37, my downside is maybe $5, but my upside is $20. That's a 4-to-1 win ratio. The plan: buy around $35 to $37 and sell when it pops back to $60. Be careful with this one, guys. Finally, stock number 5. Microsoft. People are bored with Microsoft. They think it's slow. They are wrong. Reports came out saying their AI growth is slowing down. Microsoft actually replied and said, no, our AI revenue accelerated 51%. The only problem they have is that they can't build data centers fast enough to meet demand. That is a good problem to have. The stock has pulled back to attractive levels. My strategy: I think the $430 to $450 range is a gift. The prediction: I see this stock crossing $600 in 2026. It's the safest play on this list. So we've got a mix: high growth AI with Astera and Nvidia, a media monopoly with Netflix, a swing trade with GitLab, and a safety net with Microsoft. I want to hear from you. Are you Team Michael Burry, the bubble is popping, or Team Nvidia, the party goes on? Let me know in the comments below. I read every single one. And hey, if you're holding any of these stocks, hit that like button so I know which communities are watching. If you want to see exactly when I buy these stocks in real time, or see my full portfolio breakdown, check out the link to our Discord community in the description. We track this stuff daily so you don't have to guess. Remember, the market transfers money from the impatient to the patient. Don't let the headlines scare you out of great companies. Do your research, stick to your plan, and I'll see you in the next video. Take care.